right, so today I wanted to sit down and have a conversation with Bob Angradi from Colonial Community Bank in Mount Laurel, correct?
Yes, we are in Mount Laurel, right off of 73,
Okay.
next to the Cracker Barrel.
My dad's favorite place.
Oh, yeah. I love the Cracker Barrel. We are literally right across the street.
Okay, good. All right. So you did a phenomenal webinar with Board of Realtors down here in Burlington County for Nexus. And I haven't had a chance to kind of go over the programs that are available to first-time home buyers. And you did a phenomenal job with explaining the programs. And I wanted to sit down with you, ask you some questions for what's available, because like never before, there seems to be a lot of money available in these first-time home buyer programs in the state of New Jersey on different state, county, and federal levels that I wanted you to actually go over. But first, tell me, who is Bob? How long have you been in the mortgage industry? Just a little bit of information about yourself.
All right. So my name is Bob Angradi. I'm a vice president, area manager for First Colonial Community Bank. Like you said, we're located in Mount Laurel. I'm kind of embarrassed, but I've been doing this since March of 1987. So I'm coming up on my 37th year in the business. In all different types of markets, and the market that we're in today is very different than anyone we've ever seen, especially in light of where home prices are, what appreciation has been, and quite honestly, where things are going. And honestly, it's kind of created, an opportunity for first-time home buyers, because it is a great time to buy. It really is. And people always say, it's kind of crazy. Isn't there going to be a housing correction? Isn't home prices going to go down? Well, you know what? Based upon what? Is really what I ask them. Based upon what? I mean, if you go back to the early 40s, there's only two times in the last since the 1940s, where appreciation levels were actually negative. Two times. Could you imagine if you were a boxer and you've lost two times since since the 1940s? You'd be the all-time champ.
Right.
So the bottom line is, looking forward, based upon where appreciation was just last year and what's expected this year, that the cost of waiting, if you're a first-time home buyer, it's only going to cost you more money. Home prices are going to be higher. Even if a year from now the rates are lower, your payment will still be higher. I always tell people it's a great opportunity to buy today, because, and we're going to talk about this, there's so much money available to first-time home buyers. And I think the purpose of this call is really to educate home buyer out there that, man, there's a lot of money out there. You just need to kind of look and get with the right realtor who's got the information and find out, hey, what's your available? Because there's money at the federal level, there's money at the state level, there's money at the county level, and there's even private resources too that Fannie and Freddie just literally today, their Fannie Mae and Freddie Mac, if you're at 50% area median income or less, you get what they call a home ready loan. You're getting $2,500. It's not a grant, it's just a credit. So that starts effective today, literally today. And First Colonial is actually rolling out our own CRA product, which basically is a 3% down loan, which is going to be at a below market rate. So there's opportunities that literally present themselves every day. So
I agree. And one thing that I do notice that, a lot of buyers, everybody's waiting for the rates. And as we can see, the Fed is not pivoting anytime soon. As you and I talk, we're waiting for, them to land the plane at some point. So everybody thinks that, once the rates go low, it's the best time to buy. But what you want to think about it is that's open season, because it's going to be the same as it was previously. You're going to have way more buyers out there.
Right now, like you said, there is a significant lack of inventory. And the hope and the expectation is that when interest rates come down, you have a bunch of sellers out there who are like, you know what? I'm sitting on a 3% or 4% rate. I've been waiting to move and I got a ton of equity. Now's maybe the time because now interest rates are in the fives. But remember, while there may be more inventory, those sellers of those homes are also buyers.
Correct.
So net, we're still going to have an inventory shortage. And again, go back to your economics class, the law of supply and demand. What happens when there's less demand and more and there's more buyers? What happens with price? Price goes up.
Yeah.
So again, first-time home buyers, if you're thinking that the lower rates 6 months or a year down the road are going to make all the difference in the world, you're sadly mistaken.
Right.
You're still going to have an inventory. There's going to be more inventory. There'll be more homes, but there's also going to still be a lot of buyers, which means multiple offers.
Competition.
So again, the idea of our conversation and the premise that we had with the Nexus Board of Realtors presentation was, how can realtors sell more homes using down payment assistance? Because I think that all these agencies, federal, state, county, they all recognize that what's happening with prices of homes, that they continue to escalate, they continue to go up because of the lack of inventory. So what can we do to help the first-time home buyer afford?
Right.
Well, if they looked at really, what do you do at it? What does the government do great at? Well, they'll throw money at it. Well, right now, there's more money available for first-time home buyers today than in 37 years of me doing this, more money than there's ever been. It's crazy.
I was shocked when you told me about, and again, I knew about the state program, but I didn't know that there was other programs and what we're going to talk about. I'm just like, there's money out there that people don't know. That's why I wanted to get the word out.
Yeah.
So tell us about, we can go from however you want. You want to go from.
Let's literally go right down the pecking order.
Okay.
Let's start with the Federal Home Loan Bank of New York. So we're blessed as an organization because the company I work for, which is First Colonial Community Bank, community-based lender. We are all about service, and that's what separates us. We're smaller, so we have to work harder. So we do whatever we can to really, be the Cadillac of service. We really want to do it. But one of the blessings about being part of this bank is that we are a federally chartered bank. So what that does, that gives us opportunity to participate in programs. Our Federal Reserve that we work with is the Federal Reserve of New York. All right. Now, they have money. It's called the Home Buyer Dream Program. And you can get up to $19,500. Now, the definition of a first-time home buyer, and you'll see this kind of across the board with all the programs, is that you cannot have an ownership interest in a primary residence within the past 3 years. Okay. So in other words, if you owned a home 5 years ago, you sold it, and you've been renting for the past couple of years, in the eyes of all these different agencies, you're a first-time home buyer, which potentially tells yourself to all these different programs. Now, what separates the programs that you're going to find is income, right? Every one of these programs has a threshold for income. So with the Federal Reserve, there is this 80% of area median income. So as long as you're at that number or below, you're good. So I live in Marlton, right? So the area median income for where the area that I live is like $91,000, right? So again, how do we calculate area median income? Well, we take a look at, where's the property located that you're interested in? Well, we literally there's a website that we go on and we punch in the address and it will tell us what the area median income for that area is. Now, the program is based upon what they call household income. So it's everybody that's going to live in that house that's 18 years or older. They're contributors. They could be potential contributors to the household income. So whether or not they're on the loan or not, they want to know. Does your 18-year-old work? And if not, which many of them, sometimes they do, sometimes they don't. If they don't, they sign a zero income certification. If you're married and your spouse doesn't work, well, we're getting their tax returns anyway, so we'll see. But all the income of those folks has to fit within that 80% or lower. Now, the beauty of this program is that this mortgage is what they call a soft second mortgage. Well, this loan can actually become a third mortgage. So there is the ability to be able to what we call stack. So some of these other loan programs we're going to talk about, the county, state programs, you can actually combine them. So what we're going to learn shortly is that the state program, they have their first time home buyer program, you can get 10 grand. So what I'm talking about with the stacking is I can get 10 grand from the state and up to 19.5 from the feds. Well, that's 29,500. That's insane.
Right.
Well, again, as long as you meet the income requirements. Now, last thing I want to mention about the federal program is that their minimum investment, so in other words, you're the buyer, you're going to get the, whatever it be, 10, 15, 19, whatever amount that you need. The only money that you need to invest in a transaction is $1,000. That's it. Just $1,000. So in other words, if you put down $2,000, we used the Federal Home Loan Bank's money, you're getting, we'll say 19.5. It's 20 grand minus $500 that's set aside for the homeownership counseling. So you're getting net 19.5. If you put $2,000 down as an earnest money deposit, an EMD, when you go to closing, they're going to hand you a check back for $1,000 because you've invested too much. Now we got to structure the loan that way, but in theory, you could buy a home with as little as $1,000 underneath of that program. Crazy good. And a lot of people don't realize that program's even out there. That's the crazy thing. So, programs like this is why, it's so valuable to get the information out there to the people that there's money out there, folks. You just gotta partner with the right realtor and get that information. Really what is paramount here is that people know. So that's the feds. So let's talk about the state program. So the state program, they've actually turned 40 years old this year, which means they've been doing business. They've been offering opportunities for first-time home buyers for 40 years. Last year they did close to, from what I understand, like 3,000 transactions. So they're making it happen for a lot of people. Now, underneath of their program, they actually have 5 different programs. They have the first-time home buyer, they have the first generation, they have Homeward Bound, they have the HFA program, and last but not least, they have a police and fire program. So individuals who are, policemen, state policemen, local police, all potentially eligible as long as they're within their retirement system. So let's talk about each one of these individually. The first-time home buyer program is where you can get upwards of $10,000. Now, let me back up a second. It's the state program. So it's a department of our state government called New Jersey Housing Mortgage Finance Agency. It's a department of our state government. And their purpose, and quite frankly, in part, is to promote home ownership throughout the state. And one of the ways that they do it is through these DPAs, as down payment assistance program. So it's $123,500, for the first-time home buyer program.
That's a max.
That's the max. Okay. So again, remember the feds, really town specific, they're 91. So if you're going to combine the programs, the buyer has to be below the lesser of the two, right? So that's for a 1 to 2 family dwelling in Burlington, Camden, Gloucester counties. All right. Okay. Now, so what are they doing? They're giving you 10 grand. It is what they call a soft second mortgage. Great thing about that second mortgage, 0% interest rate, and there's no monthly payments. And better yet, it's forgiven after 5 years. So if you decide that you have to sell within the first 5 years or even refinance, you have to pay the 10 grand back. Right. Now, so the 123.5, it falls underneath of what they call their statewide limits. They actually have another section where it's the urban target limits. So there's certain areas within the counties that they deem to be an urban target area. And the income in those areas, in those counties, Burlington, Camden, Gloucester County, goes up to $148,200. So what are some of the areas that we're talking about? Well, in Camden County, you're talking about City of Camden, Lindenwold, and Saucon. Okay. Right? Which I thought was kind of crazy. In Burlington County, Maple Shade, Mount Holly, Southampton. Those are examples of what towns you can actually meet. So, for example, when we qualify somebody, obviously I look for as much money as we can get for. That's my job, But let's say that they're above, the 80%, but they're below these numbers. Well, hell, you can at least get at least 10 grand,
Right.
And you're going to hear in a second, you might be able to get an additional 7,000. But again, depending upon your incomes, you can go in, we'll say, Pennsauken or Maple Shade and damn near make $150,000 between you and your wife or your significant other and be able to buy a home and get 10 grand at a minimum to help towards basically defraying the cost. So, back in the day when we could do seller concessions, which, as you know, today is hard because of the real estate market, but when we get back to a market where it's a little bit more balanced and we can get seller assist, you could structure deals where using the New Jersey housing program, where you need very little money, if none at all, if you can pick up some money in a seller assist. So let's talk about the first generation, which kind of goes hand in hand with the first time home buyer program.
And this was new to me. I didn't even know about this program at all.
Right. This is nuts. So you could be a first time home buyer and you're going to get 10 grand. As long as you're a first time home buyer and you meet the income requirements and you're buying in one of the eligible areas, you're guaranteed 10 grand, right? Assuming obviously you qualify. Now, they added a second part of the program, which is called the first generation program. So with the first generation program, what they do is they look at the buyer or buyers and they look to the parents and basically ask the question, do the parents currently own a home? If they're deceased, well, they don't own a home. They would be eligible first-time home buyers. And when they talk about owning a home, it's not only within the past 3 years, but it's also not only in the United States, but worldwide. All right. So, and again, it's hard to kind of police that, but and there are ways that they can, their buyers basically sign an affidavit that basically certifies that I am a first generation homeowner. You get an additional 7,000. So all of a sudden, 10 grand goes to 17 grand. Now, if any of your buyers happen to go to the New Jersey housing site, they may be confused when they get there because they're going to see, well, up to 15,000. Well, let me just clarify that the 10 grand is the areas that you and I kind of service, Burlington, Camden, Gloucester counties. But when you start to venture further up north, some counties like Ocean County, Mercer County, the 10 grand actually gets elevated to 15 grand. So you can literally get anywhere between, in Burlington County, 10,000 to 17,000, assuming that you are a first generation homeowner. And you can get up to 22,000 if you happen to be buying a house in the northern part of our state. All right. So that's first generation. All right. Next one I'm going to talk about, I'm going to kind of go out a little bit out of order, is the HFA program. So the first time home buyer is basically a government loan, which means a government loan means that we could couple FHA, VA, and USDA with those programs. Minimum credit scores like 620 is what they're looking at for them. So, one of the biggest myths with first-time home buyers is that, I need great credit, in order to buy a home. The answer to that question is no, you don't. Minimum credit score is 620. And let's face it, I know you and I, we've done this in our past where somebody comes to you where they're below 620. Well, that's part of pre-purchase counseling that we do. And that's one of the things that we like to do is pull their credit and see where they're at. And if they happen to be below the 620 and truly their dream is to buy a home, well, what we can do is we can, basically counsel them, coach them, and say, hey, listen, I got tools that I can use through our credit bureaus, our credit agencies, where we can simulate if you pay certain things off or pay certain things down, and we can simulate what those actions will do to one's credit report. And what we can simulate is, okay, if you pay certain things off or down, that, hey, it might improve your credit score 20, 30, 40 points, where maybe you were 600 and and now you're 630. Well, now guess what? You can qualify. You meet the minimum requirements. So
You're given a plan of action.
exactly right. So, nobody's ever out of the game. The thing with credit is that bad credit does not last forever. If you take steps today, with the right people, we can put you on course to be able to fix your credit, get you on track to be able to buy a home. If that is what your goal is. Sometimes some people are a little bit more extensive. Sometimes it's just really quick fixes because, credit scores are impacted by obviously your payment history. It's also impacted by your balance to limit ratios as an example. So sometimes quick fixes are may have perfectly paid credit, but they're maxed out on certain credit cards. Mm-hmm. Well, guess what? With the down payment assistance, maybe some of the money that you've been saving all along to be able to buy, well, guess what? Chances are maybe you don't need to use all that.
Right.
Perhaps maybe what we do is we take some of that money, pay some bills off, get your credit scores where they need to be, and let's take a look at potentially stacking some of these down payment assistance to make home ownership a reality. So the first time home buyer is a government loan, FHA, VA, or conventional, or USDA. I misspoke there. The HFA program is the conventional version of the same program where you can get 10 grand. And if you happen to be a first generation homeowner, an additional 7 for a total of 17. So the first time home buyer in HFA, government versus conventional. Now, income requirements for that program is 148.2 in our areas. So strong credit. Debt to income ratios and all these, for the most part, will allow you to go up to the mid 40s. The HFA in particular will allow a debt to income ratio up to 50%. Now, the conventional version of this, even though the guidelines say 620, in practice, you can get in conventional loan with 3% down, but what we're finding in practice is that in general, we're seeing higher credit scores go through, unless you're purchasing in a designated market, sort of like a Camden or Atlantic City or targeted areas, Vineland, Bridgeton, places like that, where, they have tweaked the automated underwriting system to a point where, some of those loan level price adjustments and adjustments within the automated findings, give us a success. So basically, the HFA is the conventional version of the first time home buyer. Great, great, great program. And again, in this market, as you know, there's a new house will come on the market, multiple bids. Our job is to kind of present that buyer's offer in its best light. And not only are sellers looking at, obviously, ultimately what the price that's being offered is, but beyond that, they're also looking at credentials of the deal. Yep. What kind of financing is the buyer getting? That impacts it. And there's a perception amongst sellers that FHA is really not the preferred financing. Obviously, the preferred financing is really, it's not financing. They want cash.
Right.
It's king.
Right.
But not everybody can pay cash for a home. Second best is conventional, which is one of the reasons why the HFA program is so popular. And again, you can get 10 grand, possibly 17 if you're first generation. But again, what we're seeing with those folks is those who are getting those mortgages is a better credit score. So again, that's all something that we talk about when we do the pre-qualification, pre-approval, is to kind of best match the buyer with the financing. Because if you got a 620 credit score, the chances are you're not going to get the HFA. You'll get the FHA. You'll get the first time home.
One thing that I try to do, especially when I'm working with a buyer, is I try to make sure this is a team effort, right? So I will ask a lender, do me a favor, whether it's video, whether it's a text message, whether it's an email, reach out to the listing agent. So there's some rapport, just in case that, because as a listing agent, you want to be sure that the person can get to closing, because ultimately it's up to you to the table. It's up to me to help them find the house. So I always want a lender that is going to be able to reach out to the listing agent on behalf of the buyer. which is very important, especially in this market.
You'd be surprised how many lenders don't do that. Which is kind of crazy. And, it's funny. I've been in business 37 years, so I've done thousands of transactions, which, I know a lot of agents, and they know me, and doing it 37 years, they know that being a man of 5 children, I can't afford to do transactions that don't close, because that's ultimately my reputation, your reputation. But, hey, listen, I got to tell you that what you said is a great point, that our jobs are to present the offer in its best light. And man, let me tell you, if I have something to brag on about the buyer, I'll issue a pre-approval to you, but it's just a piece of paper.
Right.
What I like when I talk to the listing agents, I take the approach of, hey, you got my piece of paper that says, hey, they're good to go. You know me, know our reputation, we'll get you to the table. But let me tell you a little bit more that's beyond that piece of paper. You got great credit, or you got great job stability, or you got money in the bank. We're sure as heck is going to talk about that, because that agent, that listing agent, is going to sit down with that seller and say, okay, we got 4 offers, and they may all be relatively the same price. So what's going to separate one from the other? And if they know that these working with the buyer, I was working, doing the financing, they know us, they trust us, if all else is equal, and we've taken the time to call that agent and say, this is a damn good buyer. And when you sit down and talk to their seller, let me tell you a little bit more detail that I think will be helpful and useful to kind of separate us from the crowd. And that's a great point that, in this market, it's tough. But the one thing I can honestly say, it does make a difference with who you do business with. You need to be doing business with true professionals who do this for a career, not just a job, but a career, and that has the buyer's vested interest in success and getting that home. And not all realtors are the same. Not all lenders are the same, and those who are selling homes today are doing exactly what you just said. That separates you from everybody else. The 4th program I will talk about is a homeward bound program. So this one, it's again a government loan, very similar to the first-time home buyer, but a couple different things that are noteworthy here is, again, credit score requirement 620. The thing here is the income limits are higher. This one goes to, remember, 123, the first-time home buyer. This one goes up to 148. And the debt-to-income ratios are higher. So, whereas the first-time home buyer, they kind of limit you somewhere in the neighborhood of 47% or lower. This will allow you to go a little bit higher, the 50%. Another thing, too, that should be noteworthy with all these different programs I'm talking about, the first-time home buyer, the HFA, first generation, homeward bound, all the rates that New Jersey Housing is offering are below market rates. So the reason why the homeward bound program is important, because number one, higher income and credit score, but the interest rate is much lower than what you're going to get in the market. Here's the other thing that, for people who are or aren't first-time home buyers, you can use this program and not be a first-time home buyer. You don't get the down payment assistance. Mm-hmm. If you're struggling because I got a 630 credit score and I'm selling my house, I want to buy another home, your rate likely on the market's going to be north of probably into the mid to late 7s today, Whereas this program, you're going to be in the low 7s. So you're getting a better rate, Right. So that's something noteworthy about the homeward bound program. It's a program that we sometimes use. It's not as popular as the HFA or the first-time homebuyer program, but again, it could be something that, again, when we're sitting down with the buyer and talking to them and counseling them on their next steps, that could be a program that, hey, can save them some money. And ultimately, that's my job is to, again, a mortgage is not one size fits all. Mm-hmm. It's not. You need to kind of sit down with the customer, understand where they're coming from, where they want to go, and my job is to best put together a loan that's going to meet their needs and their family's needs. Now, the last one is the police and fire. Now, this program, it's a conventional loan, all right? They do require, 15% down, all right? Max loan to value is 85%. The rate on this one's insane. It's 5.07%. So who is eligible for this? And this is probably, I'll read it to you, is active members of the New Jersey Police and Firefighter Retirement System with 1 year of credible service, all right? And maximum mortgage on something like this is $766,550. It's a 30-year fix. This rate only changes twice a year, in February and then again in August. So we're going to have 5.07 until August. Now with this program, again, we're talking a lot about down payment assistance. This one does not have down payment assistance, but for those eligible police and firefighters, the guys who put their life on the line for us every day, this is a tremendous program, that has a tremendous interest rate. It's, 2% below current market rate. So it's definitely noteworthy, and again, creates opportunities for those folks. As of right now, we talked about federal programs, which is up to 19.5. We talked about the state programs, which you can get up to about $17,000. Now, what we've learned is that you could actually be a first generation, get a 6 1/8% interest rate underneath of a first time home buyer program, get 17 grand. And if you income qualify, you can get an additional 19.5. So a buyer combining those two programs to get literally $36,500. Now, for first-time home buyers, why do we say it's a great opportunity? Well, home prices are going up. This is going to help with affordability. Even though prices are going up, if you got more money to put down, you got $36,500 to work with. Yep. Now, if you've been saving money, we can take that money too. Or better yet, hey, let's take a look at the home. And maybe some of the money that you were earmarking to buy the house, maybe we put that on the sideline, and maybe you found the house in a great location, but perhaps maybe it's a little tired.
Right.
Think about what you could do with that 10 grand that maybe you have saved. We'll use the money that the government's given us. And now all of a sudden you got money to fix up the kitchen or the bath, or maybe to put new carpets there, or maybe to paint the place. If you look at it from that perspective, all of a sudden now maybe some more homes, because of the lack of inventory, maybe some of these homes that maybe you're not crazy about, if you can look beyond the condition, maybe it's the location, maybe it's the neighborhood that you're looking for, maybe it's the school system you're looking for, but the house maybe isn't. All of a sudden we get you thinking like that, you're much more educated. And I'm sure that's exactly what you do, is just say, look beyond the clutter and the crazy carpeting and the goofy wallpaper. Pretend that's not there and what you could do with that house.
People are actually doing that now. I've seen, excuse my French, shitholes, and they've gone off the market, not by an investor, not by a rehabber, buyers who want some sweat equity. So They're doing it.
Crazy, crazy, crazy things. So the next thing I would like to talk about, we did federal, we did state. Let's drill down to the counties. All right. Now, so let's talk about Burlington County. So Burlington County is giving $25,000. So that's 15 grand for down payment and an additional 10 grand for closing cost.
I remember at some point it was just 10.
It was.
And many agents that know Georgia that used to be, I don't know if Georgia's there anymore.
No, it's Georgia's gone, and a new guy by the name of Robert Burton.
Okay.
Right. I had Robert in to talk to my sales team. He's come in and he single-handedly has changed this program to where they had money that went back to the COVID days that they just didn't lend out. They're sitting on so much money that he was able to get them to increase the offering to 25 grand to make more homes eligible. Now, this one is a little bit more restrictive. All right. Mm-hmm. So max sales price, 315 grand. So that gets hard because in our market, your sales price has to be 315 or below. Other thing you have to do with the county programs is, remember I said with the Fed, it's $1,000. Well, New Jersey housing, believe it or not, you don't have to invest anything, assuming that, 10 grand or 17 grand is sufficient, but you'd have to pick up the difference. But these guys require that you invest 3% of the sales price. Okay. Right. So 300 grand house, you have to put 9 grand into the deal. Right. So this does require a little bit more buyer investment. All right.
To play.
You got to pay to play. Now, the income requirements here are a little bit more restrictive. Mm-hmm. So for a family of 2, max income 71.4. For a family of 4, 89,250. You could couple. So the county programs, whether it be Brighton, Camden, Gloucester counties, they all require that they be in second position. And New Jersey Housing, same requirement. They require to be in second position. So you can never use those two programs together. But the federal program, well, they'll go in second. Hell, they'll even go in third. So that's where I could do 25,000 and then give them an additional 17 on top of that if they qualify. So think about that. 25 plus 17, that's $42,000. Now you have to invest 3%, right? But it may be worth on a $300,000 house to invest 9 grand to get 42. They're a little bit more restrictive, 620 credit scores. All right. Now their debt to income ratios are a little bit tighter. They're like in the low 40s, 42, 43% max. Their retention period is 6 years. You do have to apply separately, to Burlington County. The other thing that they do is they are going to want the buyer to get a home inspection, and they're going to want to see the home inspection. And quite frankly, they will do their own inspection too. So there is an added, a little bit more work involved with the county program. Now, the other thing that they say too is that it could take 45 to 60 days to close these types of transactions when you're involving the county, because their involvement is pretty deep. All right. For the other programs, New Jersey Housing, we're closing them like an ordinary deal, 30 days or less. Again, a lot of that really is dependent upon the buyer, how aggressive they are with providing us the documentation.
But you have to pick a lender that understands how their process works.
Yes.
Because, the day where, it's you submit the file, and if something's missing, you go right back into like a queue, or, you know what I mean?
Yep. You do.
Sure that you have a lender that understands what the process is.
Yeah, our goal, we get a very, very high percentage of our loans that when my underwriting staff submits to the state, we get first time approvals all the time, which is great, which definitely cuts down the timetables that are needed. And New Jersey Housing gets a pretty bad rap that, it takes forever to do these deals. No, it doesn't. Say
that again. Say that again for the realtors in the back.
It doesn't. And let's put it this way. If you're doing business with a lender who doesn't routinely do these all the time, they're not going to listen, they're a quirky company to work with. And we know that. But the good news is we're a top 10 lender, in this state. And I just want to kind of point this out. Generally speaking, we do business in Burlington, Camden, Gloucester counties, Atlantic County, sometimes, Cumberland, Salem counties. We're still a top 10 lender. And the point is, we're only in the southern part of the state. Right? That's how much business we do that still makes us one of the leading lenders at the state level. Mm-hmm. So the point is, we understand their quirkiness. We know where they're quirky. We know the things that they're going to ask for. So we prep the customer up front that some of the stuff might seem Mickey Mouse. Well, guess what? It is. But we know where all the potholes are, and we're going to avoid them so that we can close you quickly. That's the goal, So with the county program, like I said, those will take 45 to 60 days. And you do have to do a separate application, which we have, and we'll help you complete it. We'll get you in touch with Robert, and you do what you got to do to get approved through them. But once and you can do that before you buy. You can be in a position where hey, get yourself not only pre-approved with us, we'll get you pre-approved with the county. And so that when you go out with and buying a home should be fun.
Right.
It should not be a stressful situation where you're sweating a mortgage. We want you to enjoy the ride, enjoy the process, because buying a home should be fun. It's, at times can be a daunting task, but when you work with people, who understand the process, know the process, and will basically be with you from day one. And when you're at closing, I'm sitting right next to them because we start in the very beginning and we want to finish. And my job is to make sure when we get to the end line, that closing is one hell of a celebration, and that's what it should be, so that's kind of what we look at. So now I'll touch on briefly Gloucester County and Camden County, because they're very much the same as Burlington, but the difference with them is, again, same income limits, right? Again, same deal with 3%, got to submit a separate application. 45, 60 days to close, 620 score. Camden and Gloucester is $10,000. Right? That's the difference. Interestingly enough, 2 weeks ago, we met with the Gloucester County folks, and I had told them what Robert was doing in Burlington County. She was like, "What? Are you kidding me?" And I said, "Well, you know what? I'm going to get you I'll get you Robert's number, give him a call, because they're in the exact same situation." Right. They're like, "Man, we got money from COVID too. Like, shit, we need to get money out." Wow. And so look for Gloucester County at some point in the future to kind of change up what they're doing to attract more buyers. They got money to put out there, and they want to put it out there bad because they're sitting on it. But again, people just aren't going to them for whatever reason. People are not aware that these opportunities exist, and it's a shame.
We have to do a better job, and which is why I'm doing this now. I feel like we have to do a better job to speak to those that don't know.
Yeah.
So
well,
definitely,
programs like this are so valuable because it gets the word out that there's money, and be aware that there's a lot of money out there, and it's even like kids with college education, scholarships. If you look hard enough, you'll find. But people just don't know how to get started. And I think that's the biggest issue with most first-time home buyers. They don't know how to get started. What's my first step? What do I do? And honestly, for anyone who might be listening, you go to a person like Dee, she'll take you underneath her wing and we'll get you on track. And when you're ready, you talk to a guy like me or a lender, and hopefully what they will do is kind of embark a lot of great information for you and do a thorough pre-qualification and figure out, what you qualify for, because there's a lot of money out there. And, we've closed transactions. You just sit back, you're like, oh my God. And when you sit back, you're like, man, you got like 30 grand and you bought a home with virtually no money out of pocket. Like, you almost want to get on the top of a mountain and scream like, this is real. This happens, and there's all sorts of opportunities. So the last source of down payment assistance is what we talk about, private sources, right? So like I mentioned to you earlier, today, March 1st, Fannie Mae and Freddie Mac are rolling out a program, and it's really geared to really lower income buyers, 50% area median income. So that's definitely a much lower income threshold, but they're just giving $2,500 as a credit towards closing costs. So you could take the Freddie Mac program, you're getting $2,500 towards closing costs, and you can couple, the 19.5 from the feds, so you can get over 20 grand, and again, your closing costs aren't going to be that much, I mean, you figure, again, people always ask me, well, how much are closing costs? Well, it's a function of, sales price and loan amount, but in general, closing costs and escrows, $6,000, $8,000. So the fact that even with the county program, they're giving 10. So what we'll do, we don't want to leave money on the table. So maybe we buy a point, or maybe if it's a conventional, we can do single premium PMI. Maybe you could use that money to buy that out to lower the monthly payment. So there are so many creative things that can be done, with the money, that we don't want to leave any money on the table. We want to use every bit of it. And the goal is to reduce the out-of-pocket and lower the monthly payment, to make these homes more affordable. Home prices keep going up, but as long as there's a lot of money, we can kind of fight that trend by driving down the payment. And ultimately, that's what it's all about, making the payment affordable. A lot of banks have CRA programs. CRA stands for Community Reinvestment Act. So that's basically an edict for every bank out there to lend within its community. And First Colonial Bank is pleased to announce, effective today, that we are rolling out our own affordable mortgage program. It could be a conventional loan. It could be an FHA loan. We're going to give, depending upon whether it's conventional or FHA, we're going to give a big lender credit, to the buyers, a big reduction towards closing costs. On the conventional, it's going to be a rate that's even lower than the state's program. So, we're excited about it. We think it's going to create a lot of opportunities from homeowners, in our area, Burlington, Camden, Gloucester counties, that it's just more good news for first-time home buyers. Some local townships have programs that, from time to time they have. We, as a bank, we also do business in Pennsylvania, and we also participate with New Jersey Housing in the Pennsylvania Housing Finance Agency. And we actually did a meeting where we brought in a group called the Urban League of Philadelphia. Okay. And let me tell you, they got programs. So there's money that's out there that, again, like I said earlier, it does matter who you do business with. Obviously, the key person in the buyer's transaction is their agent. Right. It's so important because that person is going to be your guardian angel from day one all the way to the end, is going to go through every home with you, is going to talk, honestly and openly to you, will help you guide to make the best decisions. That our goal is to make sure that when you leave that settlement and you go to your house for the first time and you have your keys, that house is everything that you dreamed of. And that's what we want. I've been doing this for 37 years, and I've done people's mortgages. I end up doing their kids, their grandkids. It's a privilege to be that guy, that generation after generation. I help them because they believe and trust that we have their best interest at heart. That's why you've been doing this as long as you have. I've been doing this as long as we have. So at the time, a house that was for sale in Mount Laurel. Okay. And it was listed for $245,000. And if you recall, I kind of went through just kind of some examples. Mm-hmm. So this house in Mount Laurel, which was a condo, listed for $245,000. And if you just did traditional FHA financing, and at the time, the rate was 6.5% for just a regular traditional FHA loan. But the monthly payment on that house was $2,109, and they needed $15,000 to buy. So that's an example of what, without doing a down payment assistance, that's kind of on the $245,000 with down payment and closing costs, they needed $15,000 to buy. So that's just that. So we talked about the first one I talked about, or the second one I talked about, which was the first time home buyer program through New Jersey Housing. Mm-hmm. That $245,000, now at the time when we did this, the market rate for the first time home buyer was 6%. Remember, they were getting $10,000. Right. So that monthly payment went from $2,109 down to $2,031. Your out-of-pocket went from $15 down to $5, and that's just using the $10,000. So the payment was lower, and obviously the cash to close a lot lower. Right. Now, let's say that same buyer was not only a first-time home buyer, obviously, but it was also first generation. Again, same rate, 6%, same house. Now, monthly payment, again, $2,109 down to $2,031. Now the payment's $2,018. They need no money out of pocket because the $17,000 covered all the down payment and all the closing costs. And usually the driver of the closing costs is the taxes. That's a big part of the cost. Then I went nuts and said, well, hell, let's say we could stack the 17 with the Federal Home Loan Bank money. Mm-hmm. So now that rate's still 6%, right? Remember, Federal Home, they needed to invest $1,000. So I did this where buyer came out of pocket $1,080, but that monthly payment went from the traditional, which was a regular FHA, $2,109, down to $1,873. So again, how do you sell more homes with down payment assistance? Well, there you have it. You're making homes more affordable to more buyers. The first step that they got to do, whether they're ready or not, is to call you, and you'll figure out to you. Normally, listen, get yourself in touch with a great realtor. She'll she'll put you on track. She'll put you in touch with me, give you my cell number. I'm available morning, noon, night, weekends, and
which is always good, especially on weekends, because that's like the busiest.
Yeah.
Saturdays.
When you work, we have to work. Listen, I work for a bank, and I hate to say this, hopefully nobody can hear me, but I don't have traditional banker's hours.
Right.
You know, because I got to work when you're working, because we're a team. Yes. That's really what it comes down to. We are your home buying team. Mm-hmm. And the two of us working together makes the transaction that much better, because we're working together, we're working in the buyer's best interest, and we communicate so that we keep you on track. Because when I pre-qualify people, I ask them, you tell me, you know your budget better than me.
Mm-hmm. This is true.
What do you think you can afford? Mm-hmm. You know, I always like to get their perspective in terms of, okay, yeah, I'm paying $1,500 a month in rent. Maybe I can go to $1,700, $1,800 with a house. Okay, I'm going to come at you from a different perspective and say, hey, I'm going to give you the perspective in terms of what the bank's going to actually approve you for. So now you want to be here, you know you can go here. Now go back with D and start seeing what's out there, because you might find that number that you gave might be a little bit unrealistic in terms of what things cost, right? If you know you can go higher, it's a matter of just knowing that. And then when you find something that you like, I tell them, hey, text me the information. I'll run you the numbers, give you an idea about what the payment's going to be, so that you know that when you walk into that house, you're like, man, I can afford this. I can do this.
What I normally do is, when I know that we're going to go look for a property, I actually say, okay, which property is the property that you really love? We're going to send it to Bob. He's going to run the numbers, give you cash to close, how much down, whatever the numbers are, just so you have an idea, so you know what you're getting into when we go to see the property and how much, to offer,
right.
So the buyer knows. So that's normally how I usually do it, which is a good.
Oh, yeah, no doubt. And that's really, again, that's teamwork.
Yeah.
That's the two of us working together, giving the buyer the information that they need to be able to make good decisions. My job is to keep them on track financially, to make sure that, hey, we started with a budget. I want to keep you within your budget. And if you're going to go outside that budget because this is a house you want, you'll know how far you can stretch. That's the most important thing. And let's face it, in this market with a lack of inventory, one of the key components that buyers have to have is be a little bit flexible, because home prices are going to be all over the place. Every house has got a different sales price with different taxes. So you might be in one town where the taxes are low, yep, price is high, or you might be in an area where prices are low, but the taxes are high. We got to look at the impact of those things on that mortgage payment.
Bob, I appreciate you taking the time to, do this with me. I got a hard stop in 2 minutes, but I definitely want you to give your phone number, your information, just so folks can reach out to you.
All right. So again, it's Bob Angradi. I'm Vice President of First Colonial Community Bank. The best phone number to reach me is on my cell right here. And that number is 609-313-9968. So you can use that number whenever. I'm always available for you. If I'm on the phone, I'll text you right back, just to let you know that, hey, I'll call you right back as soon as I hang up the call, because I'm dealing with another customer. But you always get a return phone call from me. And that's, again, probably the most important thing that we can do for you is just stay in constant contact.
Okay. I appreciate it. Thank you.
My pleasure. Okay. Have yourself a great day.
You too.
Take care.